Why do shops allow credit cards but not debit cards? Many businesses prefer credit cards over debit cards due to differences in processing fees. Credit card transactions often entail higher processing fees for merchants compared to debit card transactions. These fees are charged by banks and payment processors for facilitating the electronic transfer of funds. While debit card transactions may have lower fees, credit card transactions can contribute more revenue for the business. Accepting credit cards allows businesses to cater to a broader customer base. Credit cards are widely used, and many customers prefer the convenience and security they offer. By accepting credit cards, shops can attract more customers and potentially increase sales. This is particularly important in today's cashless society, where many individuals rely on electronic forms of payment. Fraud prevention is another factor influencing the preference for credit cards. Credit cards often come with additional security features, such as fraud protection and chargeback mechanisms. Merchants may feel more secure knowing that credit card transactions offer an extra layer of protection against fraudulent activities. In contrast, debit cards may be seen as riskier due to the direct link to the cardholder's bank account. Credit cards also provide customers with a line of credit, allowing them to make purchases even if they don't have sufficient funds in their bank accounts. This can lead to larger transactions and increased sales for businesses. In contrast, debit cards are directly linked to the customer's bank account balance, limiting the amount they can spend to what is available in their account. Moreover, credit cards often offer reward programs and cashback incentives, encouraging customers to choose credit over debit. Merchants can benefit from this trend as customers may prefer to use credit cards to earn rewards, bringing in more business. Additionally, the international acceptance of credit cards is a significant factor. Credit cards, especially those issued by major networks like Visa and MasterCard, are widely accepted globally. This can be advantageous for businesses catering to international customers or tourists. Which card is most accepted? Visa and MasterCard dominate global acceptance, with Visa accepted in 200 countries and territories, while MasterCard boasts acceptance in 210 countries and territories worldwide. These extensive networks make them the most widely accepted cards globally. Businesses that prioritize convenience for their customers often choose to accept both Visa and MasterCard to accommodate a broad range of cardholders. The widespread acceptance of Visa and MasterCard is attributed to the global partnerships these companies have established with banks, financial institutions, and merchants. This extensive network ensures that cardholders can use their Visa or MasterCard virtually anywhere in the world, making these cards highly desirable for international travelers. The ubiquity of these card networks also benefits merchants by expanding their potential customer base. Businesses that accept Visa and MasterCard can attract a diverse range of customers, including those from different countries and regions. This inclusivity can contribute to increased sales and customer satisfaction. Furthermore, Visa and MasterCard continually work to enhance the security features of their cards, providing confidence to both merchants and consumers. The reputation for reliability, security, and widespread acceptance makes Visa and MasterCard the top choices for merchants aiming to maximize card acceptance. It's essential for businesses to assess their customer demographics and preferences when deciding which cards to accept. While Visa and MasterCard are leaders in global acceptance, regional variations exist, and certain markets may have a preference for other card networks. What are the disadvantages of businesses accepting credit cards? Accepting credit cards comes with various disadvantages for businesses, primarily centered around processing fees. These fees, charged by banks and payment processors, can significantly impact a business's profitability. Interchange fees. One major disadvantage is interchange fees, which are fees paid by the merchant's bank to the customer's bank for each credit card transaction. These fees can vary based on factors such as transaction volume, the type of card used, and the industry of the business. High interchange fees can eat into a business's profit margins. Assessment fees. Credit card companies may charge assessment fees, which are additional fees for using their payment network. These fees contribute to the overall cost of processing credit card transactions for businesses. Payment processor fees. Payment processors, such as those providing point-of-sale terminals or online payment gateways, charge fees for their services. These fees are essential for facilitating secure and efficient credit card transactions but add to the overall cost for businesses. Chargebacks. Credit card transactions are susceptible to chargebacks, where customers dispute a charge and request a refund. Chargebacks can result from issues such as fraud, dissatisfaction with the product or service, or misunderstandings. Handling chargebacks can be time-consuming and may lead to additional costs for businesses. Cash flow delays. Unlike cash transactions, credit card payments are subject to processing times. Businesses may experience delays in receiving funds, impacting their cash flow. This delay can be a significant consideration for businesses with tight financial schedules. Fraud risk. Credit card transactions carry a risk of fraud, including stolen card information or unauthorized transactions. While security measures are in place, businesses need to stay vigilant to prevent and address fraudulent activities, which can be resource-intensive. Customer data security. Businesses accepting credit cards must adhere to strict data security standards to protect customer information. Non-compliance can result in fines and damage to the business's reputation. Implementing and maintaining robust security measures is an ongoing challenge for businesses. Despite these disadvantages, businesses often choose to accept credit cards due to the benefits of increased sales, customer convenience, and competitiveness in the market. To mitigate the impact of processing fees, some businesses may adjust pricing strategies or encourage the use of lower-cost payment methods.